In uncertain times, it's essential to consider alternative forms of currency and investments to protect ourselves from potential economic crisis. One such option is investing in precious metals like gold and silver. While the idea of a dollar collapse may seem far-fetched, it's prudent to be prepared for any possibility, including the collapse happening as soon as this year. The focus here is on the importance of understanding the distinction between investment demand and monetary demand when it comes to silver. This video delves into the significance of silver as a form of money and its potential role in surviving the aftermath of a monetary crisis. By exploring historical patterns and current market indicators, we can gain insights into the importance of gold and silver as assets and their potential value in times of economic uncertainty. As the crisis worsens, central banks may start printing more money, which will put pressure on precious metals like silver. When this happens, there may be a rush to acquire silver from various sources, depleting the available stockpiles. This has happened before, with a notable instance in July 2020, when the amount of silver being delivered exceeded the registered silver available, leading to a bank transferring silver from one category to another. In the world of comics, the rules changed in 1980. At that time, we were already operating under a gold and silver standard, as the value of gold was sufficient to back all of the Federal Reserve's liabilities. This gold and silver standard had been in place for centuries, with a ratio of about 15:1 between gold and silver. Given this existing standard, the comics had the freedom to manipulate the rules. However, if such rule changes were made in the current environment, where the Federal Reserve has no capacity to raise interest rates anywhere close to 20%, it would be impossible. In this scenario, all the demand would shift towards physical markets, rendering the comics irrelevant. People would disregard their influence, and instead, physical silver would be exchanged for goods in decentralized markets, possibly through the trading of physical coins or certificates backed by reliable assets. The ultimate outcome we anticipate is the resurgence of gold and silver as forms of money. Throughout history, no currency backed by a basket of commodities has proven sustainable. Gold and silver have consistently served as money, while schemes involving real estate, tobacco, or other commodities have faltered quickly. To supplant the dollar and establish a new currency, such as a formation of BRICS, it would need to be backed by gold and silver. However, this would require the participating countries to exhibit fiscal responsibility, something that is currently lacking in nations like Russia, Brazil, and India. Rather than leading the market, the BRICS would likely follow the market's momentum and claim credit for the shift. In terms of timing, it is essential to be prepared for a potential collapse of the dollar. Acquiring enough gold and silver to survive the immediate aftermath is advisable. While the collapse could occur anytime, including this year, it is not definite. Some industry veterans, who have been in the field for several decades, have yet to witness the collapse that has long been anticipated. Nevertheless, it is crucial to recognize that all inflationary systems are exponential, leading to an inevitable vertical climb. The Federal Reserve's attempts to halt the printing of money and stabilize the curve may work temporarily, but history suggests that they will eventually have to reverse their course. Evil forces, driven by greed and ignorance, persist until they self-destruct, and this pattern will likely repeat itself. The timing of this turn is uncertain, but it is expected to happen soon, as the current trajectory intensifies the system's instability.